Let's begin with our first panel discussion for the day, Auto Finance and Dealership Growth, turning bottlenecks into breakthroughs. And this is exactly what we all look forward to. Ladies and gentlemen, let's put our hands together as we welcome our distinguished panelists. Mr. Abhinav Garg, Head Product and Partnership Governance, AU Small Finance Bank. May I please request you, Mr. Abhinav, to join us here on stage? Mr. Baneswar Banerjee, SVP and Business Head, Automotive Loans, Mahindra and Mahindra Financial Services Limited. Thank you, appreciate it. May we please request Mr. Puneet Dhawan, Business Head, Two-Wheeler and Car Loans, Tata Capital Limited. And to moderate the session, may we please request Dr. Sachin Shah, Governing Council Member, FADA, to come on the dais and moderate this session. I request Dr. Sachin Shah to take it forward. Thank you, sirs. Thank you very much. Thank you for the music. Dr. Sachin Shah to take it forward. Thank you.
On behalf of FADA, I welcome you all to the 5th Finance and Insurance Summit 2026. Finance remains the oxygen that fuels our business. While a lot of innovation, technology, new cars will evolve, but finance is still the single important factor that enables our business to run. The latest FADA the Finance Satisfaction Study shows encouraging improvements. While there has been improvement in the scores from 786 to 841 in wholesale funding, retail funding stands at 818. However, beneath these numbers, there are many important challenges, as already mentioned since morning, which lie around inventory funding, used car finance, dealer payouts, reconciliation, etc. Today's discussion is not merely around problems, but it's about turning all the bottlenecks into breakthroughs. I am privileged to be joined by 3 distinguished leaders who collectively influence financing to millions of customers and thousands of dealers. I am proud to have with me Mr. Abhinav Garg, Mr. Baneswar Banerjee, and Mr. Puneet Dhawan. I would like to start with a one-word answer from each one of you. What do you think is the future of finance industry? One word that you feel that the future opportunity lies in the next 3 years. Can we start with you, Mr. Banerjee?
Check. Am I audible?
Yes.
Yeah. So, I've been the other side of the business till April, and then I moved to this. And the last 3 months that I spent understanding finance has been really, really very, very interesting. And I was telling few of the dealers that I have worked very closely is that, my this 3 months has been very exciting, very enriching, and quite a lot of learning. Earlier, I used to think that, that there is a customer for every vehicle, and for every customer there is a finance. But now when I see how the entire customer journey is, all I can say in one word is that, how do you get an offer for all is going to be that key word. How do you get an offer for all, whether at what rate and what LTV value, but how do you get to the offer for all is going to be a key defining moment, along with a process that will enable the customer to get finance with the minimalistic of the documentation. So I think these are going to be crucial, and this is how I see the next phase of growth and next phase of financing for the industry.
Yes. To you, sir.
Yeah, hi. So you rightly said financing is the oxygen for the overall auto as an industry, and we know how much auto contributes to the overall economy and GDP. We saw that the GST played a big role in terms of giving that headwind or towards a growth phase or reaching to that pre-COVID level. And we saw last month's number. I think these were some of the best numbers ever we have seen in the month of May. And I was just connecting with some of the dealers. He said, "Abhi kaisa chal raha hai?" I think we are in the good shape as of now. But we are also in that phase of that era. Then most of the things are changing. The way we treat our customers, the way we handle our customers, the repeat of a customer, the customer evolution, the customer life cycle, moving from an hatchback to now more of an SUV kind of a segment. The used car market is evolving very fast. The two-wheeler market is getting extremely fast. So I think the new mantra is how fast we change to the need of a customer, how fast we adopt technology at the root level. And I think it's not about financing anymore. It is about, as what my fellow colleague said, it is about the life cycle of a customer. How do we identify the right product for the right customer and for the right financer for that same customer? I think that will be the key for us.
So, I mean, if I have to put it in one word, it's smart digital lending.
Absolutely.
Yes. And to you, Mr. Garg, what do you feel? Is it EVs? Is it the Bharat market that will be the next 3 years, or it will be used cars?
Yeah, so I think the next phase of growth would be coming from the used cars as well as EV. EV has a strong potential, and no one can ignore that. It has to come, right? And if you talk about the Bharat markets, so surely the growth is coming from all these three segments. I think that the growth would be there in the coming times. And as a financer, you know, the used vehicle financing, if I per se, so we have come up a long way, right? So earlier, there has to be a car inspection valuation done before the decisioning, before the sanction. Now, customer gets a sanction, you know, without a valuation of a car on the basis of a reference value, he gets an in-principle sanction, right? And then and there, most of the financiers have a journey of valuation of the car. If the employee can do it self, they need not to wait for a valuator to come down and to do that all inspection for them. So it has come a long way, but still I feel, as you mentioned, this is the growth is coming from there. And as you ask for the future of the finances, yes, we can further sharpen the model of used car financing. There is still a scope of automation in used car financing, what I feel is, right? And again, the Bharat markets, obviously, lot of things have already been digitized, but yes, there is a way to go. And these would be focus for us in the coming years.
Thank you, sir. The auto retail industry has lots of glamour attached to it. And we see the glamour shines during festivals. But as dealers, every year, when we start coming closer to the festivals, we start worrying, will I get ad hoc limits? Will these limits really go up? How much funding do I need? Is there a possibility that, we can plan this at the beginning of the year rather than starting from scratch every year that, you live in a state of confusion? So can I ask Mr. Dhawan to answer this?
Yeah, I agree. This is a it's a question very pertinent and very close to heart to many of the gentlemen sitting out here. I completely agree with you. I think the automobile industry has taught us that India lives in a festivity moves. If it is Shraddh in north, so there is pre-Durga Puja festivities in east, and then post-Durga Puja it is all north, and then we have Onam, Pongal, everything. Every month we have something or the other coming up. Can we plan better? Of course we can plan better. but we definitely need some kind of algorithm or some kind of understanding in terms of which geography, which need, which funding and what time. This also means that this has to get backed by a lot of prudence in terms of lending to the right OEM partner and at the right time. I think we are still not able to synergize both the factors well, but I completely agree this can be planned in much better. We have moved some distance, but that ad hoc limit request, I think, can be planned at least if for the season now. So we are willing to support that initiative. We are willing to do that along with all of you, and most welcome. And as rightly said, it has to happen now. So we are willing to do that. But again, technology will play a huge disruption role. We have recently launched a portal for the dealers to implement their or visualize their inventory funding limits, requirements, real-time tracking of what is available. But still a long way to go. Still a lot of adoption needs to happen. But surely point well taken. Thank you so much.
Yes, and Mr. Baneshwar, being on the other side, does always understands that pain. I would like to hear from you on this.
No, so see, the way I look at the entire ecosystem is, little more different than, than on this being on this side, and hence, we are able to kind of look at how do we create the momentum much before the festive. So what happens is that when you are only working towards festive, there are a lot of CX issues which crops up. Okay, it is very important that how do you kind of start it much before, and that's what we are encouraging our team, we are encouraging our dealers that please don't wait for festive, let's plan now so that everything can be planned accordingly, be the manpower, be the be the other ecosystem which supports that kind of that kind of growth. And rightly said by sir that last financial year, there were two halves of the year, right? One was pre-GST and one was post-GST, and then just before the GST we had the festive, and the spike was so high that it was very difficult for people on ground to handle. So we are working to see that we have a product which is much before the festive, and we are not waiting for the festive, and we are also building all the adjacencies, including the tech, including the back-end support system, to be able to cater to festive much better. Ultimate aim is to see that our CX, which is the customer experience, many of the people, many of the speakers have spoken today in the morning as well, that it is no longer a loan, but it is the complete life cycle. How do you build trust, confidence? Amar spoke about it in the morning very eloquently. So I think it's important that we build that kind of seamless journey for our consumers so that we are able to cater to festive much better. Yeah.
Great to see that the financiers are well prepared, for the upcoming season. Your views, Mr. Garg?
So what I feel is this, the demands in the festive season are now highly predictable. It's not kind of, so obviously as you mentioned, the feedback of the survey shows that there are concerns. So yes, there is a scope that we be more proactive in this rather than being reactive during the festive times. And it can be planned early with and obviously 75, 90 days is not a, one size fits all kind of requirement. It depends dealer to dealer, geography to geography, right? It depends upon, the sale volumes. We need to ensure that it should not increase the inventory aging rather than, so those kind of control check balances can be built, and obviously we can be more proactive on this front. Yes.
Thank you, sir. Thanks for your views. Another problem that dealers face is, whether it's inventory funding or it's trade advance, dealers do place requests to the financiers for making the payments to the manufacturer based on which the manufacturer bills. A few brands also work on a pull mechanism. However, it's always observed while the trade advance or the inventory funding is a tripartite agreement between the dealer, the financer and the manufacturer, it does happen many times that dealer puts funds and the funds do lie with the manufacturer, where for a waiting of a truckload or the right mix not available on that day, the funds lie with the manufacturer and the dealer bears interest for it. Any views on how this pain point of a dealer can, be handled in a better way? To you, Mr. Banerjee.
So, Sachin, very good question, and honestly, when I was on the other side, I never used to think about it. But now, these are something that keeps coming to me from all our channel partners, that how do you increase efficiency? And just I want to quote, something that, our objective is, since we have a product which is TA, and then TA is, we retail and then we adjust the TA. The objective is that how do you work through a mechanism where you are not charging the holding cost to the dealer. So we have removed all those fine prints, terms and condition, which is, which earlier used to be one major criteria while giving the trade advance. So this is one initiative that we are working to make it very transparent, to make it very, clean product that the channel partner can use it. The other thing that we are doing is we are working with the OEMs also to see that it's only when your inventory gets billed, from then you are charged the interest, and you are not charged the interest if the money is lying with the OEM. So these are couple of initiatives. The other thing is also making the front line very efficient so that we are able to, churn out and rotate the funding quickly. The other thing that our treasury is working very efficiently is that as late as during the day, you can make a decision to get your funds into the system, so that you are not unnecessarily paying for the money well in advance. You are only paying when the money gets utilized. So these are certain things that we are working with the OEMs, and you will start seeing the results as we move forward. Objective is to earn out of the business. Objective is not to earn where the inefficiency is there across the ecosystem. The objective is not to earn from the inefficiency.
Yes. Great. I think those are some great initiatives. To you, Mr. Dhawan.
I completely agree with Baneshwar, but frankly speaking, as of now, do we have the right solution in place? To some extent, yes, in terms of how do we, I'll put it in this manner, this is more of a transit loss. So nobody is gaining out of it, but somebody is paying for it. So how do we cut short this transit loss? So one part is how do we plan better? Is it a weekend offer? It's a Monday offer? How do we plan a little better in the first half of the day and then doing? I've seen most of the indents are coming post 4 o'clock in the evening or late in the evening and then getting processed. Unfortunately, we are charged for the whole day. So can we make it a little more faster? Can we do it a real time off take, offload? Can those kind of planning skills, can those things be added? But I think as of now, if you ask me, do I have a concrete solution? The answer is no. But second, which is how fast we can churn this. I think to some extent in the two-wheeler industry, we have seen a real-time disbursements happening. That same thing has to now move to used cars and the new car segment. Weekend processing is no more a charm. It happens now round the clock. We have bots which are now processing files. We can even do disbursements on Sundays. So those things can actually add up to how do we improve the way we forward and the way we move in the new segment. I think those things can be done as of now, but the transit loss, I think still a long way to go.
Your view, sir?
So again, I think this is again has to be done in partnership of OEM and the financer and the dealer, right? So there is, and I think there has been a lot of improvement on this front over years. Now there is not much kind of push in terms of financing, yes, but still, if there is a room of improvement, then I think it can happen through the integrations between the three partners, wherein the financiers can get the funding triggers and then only they can disburse. That functionality can be built upon, yes, and since, as a financiers, we actually keep investing on technology and APIs integration, so this is increasingly achievable now, I think so.
I really hope this is taken forward because it's a large pain point for dealers, because generally during month ends a lot of funds lie, and for the month to start it takes a few days. So as in today's business, every penny counts for everybody. Another important thing that dealers ponder, especially dealers with multiple brands, is their interest rates, their amount of funding, again depends on the brand that they are handling. So why can't we get into a system of the dealer credits rating rather than the brand-based dealer credit rating? So many financiers would say that, X brand dealership, we are ready to fund so much, even if your turnover is so much, but for a Y brand dealership, we can open and pay whatever we want. So why shouldn't the model move towards the dealer? Because ultimately you are giving the money to the dealer and generally not to the brand. So what are your views on this, to start with you, sir?
Yeah. So I appreciate that feedback, So since we should not see the dealer just from the lens of OEM, there should be a dealer scorecard, and we have that, right? So everybody does that dealer scoring based upon the dealer performance, their financial strength, and their track record on the performances. We shall build, and it is. I truly appreciate this feedback. Yes, it should not be purely from the OEM lens. It comes as a part of the strength, and the vintage of the business and the track of their sales performance tell us all. So, yes, so we shall move toward that. Yes.
Thank you. Your view, sir?
No, I think it is very important to the way we are underwriting customers. We should underwrite the group rather trying to see the OEM and then fund. However, there are certain OEM financial relationship, which also creates some of the value proposition, because that's the competitive advantage, right? When an OEM has certain things with the financial, because of the sheer magnitude and the sheer size of the business, okay, which is also important. We just can't discount that. But yeah, when you have a multi-franchisee and you are seeing that, that you are able to give a good proposition to a group, then I think adding the other OEMs and trying to provide. So still it will be dependent on the financial and the group, but some benefits can be given. But ultimately, there are these relationships which also plays a very, very important role, which can't be,
overlooked.
Yeah.
Yes, your views, please.
So the underwriting happens at a dealer level. So the underwriting doesn't happen at an OEM level, that is for sure. But yes, there is, I would say, a brownie point in terms of which OEM is backed by which OEM, which dealer. But as you rightly said, a multi OEM dealer partner or a group partner, I think we give that due credit of the parent itself versus how is the requirement in terms of the OEM. But you can't ignore the OEM comfort, for sure not. It plays an ingredient role, but is it a decisive factor? I would say no, it's not a core decisive factor. But yes, there are arrangements, there are MOUs which are already signed with us along with the OEM, and this integration has to happen between all three, between us, the dealer and the OEM. So it has to come through that also. So again, that transit loss plus this factor has to play through an OEM partner also. So the ownership has to come the both ways side. So that way is, but frankly speaking, the core is with the dealer himself, and we do underwrite basis the dealer himself. So that way is fairly balanced.
Great. Another, rather pain point or an expectation from dealers, especially related to wholesale funding, has been to have live dashboards. A lot of financiers still are depending on monthly statements or, running through multiple emails to get information on what is the balance of their trade limit or the inventory funding or, a lot of information on the transactions that go on between the financier and the dealer. So dealers expect some live dashboards which can also be API connected through their DMSs so that, the information is available real time rather than on a daily, weekly or a monthly basis. So which makes the decision making much sharper. So your views on this, sir?
Yeah, I think in a year or two this would become industry standard. So it has to be there because currently a lot of the time and bandwidth of dealer partners go into the reconciliation of statements, interest calculations, to see what are their outstandings and all. So I believe they should have a platform where they can see, their current drawdown limits, their overall limits, right, and their due dates and all, or the interest they can earn. And obviously, going forward, they can have AI-enabled suggestions as well from where to raise money and when to raise money. So those kind of stuff has to be there, and this state has to become. As I mentioned, with this further, evolution on tech and digital piece and the investments everybody is doing. So it is significantly achievable in coming 3 years. And it has to be, I think, integrated with the DMS system. Then only, you get a real-time updation and real-time reconciliations.
Yes. Your views, Mr. Dhawan, on this?
So this is a very legitimate and a very simple ask. So we are, as what Mr. Garg said, we are on the cusp of reaching to that, and I think every financier as of now is working towards that same goal of showcasing the real-time information about the customer, the payout, and of course the inventory funding details and adjustments, of course. So probably, I don't think so it will not take a year from now. It should happen ASAP. So we are in that era that wherein we'll now have one-to-one integration. It is no more one-to-many. It will have a one-to-many integration. So those APIs are now very much possible, very easy to do. Across all systems you can integrate. So I think the MIS's age is already gone. So you definitely will get a dealer portal wherein you can find, raise queries, get answers, and all real-time information. What is available with me should get visual to the dealer port. I think that is very much possible, and it is on the verge of getting there.
Great to hear that, sir. Yeah, Mr. Banerjee.
Yeah, no, so Sachin, so just to put it in perspective, it is the need of the hour that, that today we don't interact on Excels, okay, so that is something that you will see very quickly happening. There are software as services available which can be quickly plug and pay, and you can get, the desired thing that you are talking about. But it is very important that there is a seamless integration between, the systems that is operating out, right from the OEM to financiers to the dealers, so that again I come back to the same point that that the inefficiencies of what we do, in that somebody else makes the money which is not helpful to anybody. So it is very important that these systems talks to each other, and as sir said that now the API integration is very easily available. So you will see this happening. Otherwise, it will be very difficult to do the business. So this transparency, availability of the data at the click of a button, able to see what is the balances, what can be utilized, how much, aging things are happening. I think these are something which is something that has to be provided and integrated with the DMS, so that all your transaction, paying off, these GSTs and all, they become all seamless, and you are not running through a manual process. So it has to happen.
Thanks for your views and the willingness to get this in place in a short time. While getting in the inventory is that important, the most important part for any dealer is to sell vehicles, and to sell that we need to get finance, and we need to get the finance smart, and we need to get it fast. So I think another pain point that dealers are still expressing is on the TAT, the turnaround time from the inquiry till the delivery order that gets issued, which at times gets stuck for various reasons within the system. And when we check and travel across the world, we see that it happens on the table of the dealership, where the consultant just swipes the credit card of the customer and is able to complete the entire process in a few minutes. So with the kind of technology that India is moving forward with Digital India, why does it stop auto retail financing to moving to that? While some financiers do give a pre-approved loan or say that it can happen, but still is bundled with a lot of paperwork, a lot of inspections, and which at times shifts the customer's mind to a different brand, or gets tired and decides not to buy at all. So how do you think that we can put a number, whether it's minutes, hours, or a day to this, and see that this problem is left behind? Your views on this, sir?
So I think that is the mostly discussed and most important topic in the retail financing. So, for now, more than 2 decades in the industry, and still every day we discuss about this topic, right? So, I know, yes, a little delay in sanction, impacts customer experience, as well as it can impact your sale as well. But that, yes, industry has come up a long way into this. There were scenarios when there was no CIBIL check even. So there were a lot of reference check being happened, and for every finance, there was a second party involved. Nowadays, there is a single party involved in a deal, right? And so there are FI waivers being done. And after FI waivers, you have everything digital, except the RTOs kit, which are not yet digital. Everything else, I think financiers have made digital. There are e-KYCs, there are face KYCs available. You can fetch bank statements through aggregators. So, and every financer is working on bureau-based STPs, and then the account aggregator-based STPs. So things have moved a lot, and we are much, much faster than we were before, right? And major of the customer segment, I believe, get the sanction within time as well. There are a few segments, obviously, wherein there can be delay. Yes, and for what happened on the ground, that yes, there are escalation matrices as well. So for every dealer and every branch has their own WhatsApp group. On that WhatsApp group, they keep sharing the information on the deal, right? So, and they get the status of the deal on real-time basis through WhatsApp, and they have escalation on the WhatsApp group as well. They escalate it to the cluster head, or to the regional head, even to the national head, if in case there is escalation. Yes, there can be more transparency in escalation metrics, I believe, which can be worked upon. But obviously, we have moved a long way, and yes, there is a way to go. But in this era, I don't think that would be a much of problem. The transparency of higher TAT should be there. Why there is a TAT, right? So there can be a gap on the customer side. Most of the times, what we find when we investigate, there is an information which is asked to customer, which is yet to be available to a financer. Otherwise, the dealer partners and their executives and the executive of financer, they are always on the go. Yes, if the information is received, they are always towards servicing that customer and to move to the next customer. So the transparency of the reason of the TAT, if that is communicated properly, then that should not be a feedback, I believe.
Great, sir. Your views, Mr. Baneshwar?
Yeah, Sachin, so very nice point and a good topic, and I can keep talking on this because this is something that is very close to my heart. How do you do a quality, quality along with TAT? Okay, it cannot be only TAT, it has to be both sides. And there are 3-4 things that is really playing very well for India and Bharat also. One is that we must really thank RBI with the kind of push that they are doing in terms of bringing a lot of quality lending, yeah, and digitization, okay. Coupled with the AI, I think this will really transform the way lending happens, okay. Now, earlier, we never thought of a Saturday or a Sunday when people are not there to release a DO. Now there are examples that we are seeing that even if the entire organization is not working, okay, there are systems now developed, and I'm not saying that the percentages is higher, but there are possibility where a case gets logged in, your e-mandate happens, your e-KYC happens, your digitization through which all documentation, everything happens. The system is able to read, and this is thanks to AI, system is able to read it and push the case straight through. So there is no intervention of anybody doing anything. The system is able to underwrite, system is able to approve, and then finally it lands up where you can release the DO. So that's the level of digitization and AI that is coming in. So Sachin, I can tell you one thing very confidently, that TAT will definitely not be your point of discussion next time when we meet. Okay, in this forum I can vouch for it. With the kind of technology, with the kind of digitization, and with the kind of AI which is happening, TAT will be passé. What will be important is that how do you give a great consumer experience and you are able to underwrite a customer to give the best rate to the customer. Best value for his money is something that I think we will discuss as we move forward. Technology is going to take the TAT issue out completely.
That's one of the boldest and the most satisfying statement I think that dealers would like to hear today. Your views, Mr. Dhawan?
I'll certainly vouch for what Banishwar said. I think absolutely it's damn important for all of us. And next time definitely when we catch up, we'll not be talking about day stat, we'll be talking of our stat. And I'm sure the day is not very far. We are still delivering over to it, but is it 100%? Of course not. We are still there. But speed and selection goes hand in hand. So you can't have only speed and not have selection. So it also adds more responsibility both sides, not only to us, but also who is the sourcing partner here. Because this will only differentiate over a period of time. The better sourcing partner will get better speed, better approval rates. Similarly, it will have the other side of the story also. So definitely scorecards, we are already in the scorecard era. We are now in the machine learning era. We are now moved beyond that. We are now able to read documents. A CAM which used to take almost 1 day, 1.5 days, it happens now in a jiffy. You put all the data information, you get an automated CAM. It's a 10-minute, not even a 10-minute job. In some cases, it happens on the fly. So you get decisions on the, and there is no weekend effort now. It happens on a Sunday also. So already there.
Yeah,
Thanks.
just adding to that, like releasing a DO or a sanction on Sundays, at AU, even the disbursements are happening on Sundays on the real-time basis. As the case is booked, the disbursement happens then and there, even in the night at 11 o'clock or Saturday, Sunday. So I agree with the panelists that yes, this will be a discussion of the past soon. Yeah.
Thanks for the resounding confidence. One of another, point of discussion in between dealers has always been the dealer incentives and the sales consultant incentives. It is often seen that, monies are paid directly to the sales team of dealers, and at times dealers are not even aware of what funds are going to their employees, and sometimes they're also misquoted, going to the wrong people. Can we develop a system or an MIS that's transparent and visible, to dealers and the entire system as to where the money is going, how much is going, and how much should be going? So, what would be your views on this, Mr. Banerjee?
No, so yeah, this is also one point of discussion that we used to have in when we were, from OEM also money is given, and we wanted that also to be very, very transparent. So I totally agree, employee is employed by you, and there has to be a system. So I think we are developing a platform in which everybody gets enrolled, and you will be able to see what is the kind of money which is being paid, or if there is any contest which is being run. So it is very important that everything that is happening with either you or with your employee, there has to be a complete transparency, and there cannot be ways by which you circumvent this transparency. Yeah. So so again, I am pretty confident. You will see this happening, because this will be part of the governance, this will be part of the compliance, and as I said, we must thank all our regulators, which keeps all the financiers and the insurers completely binded to how we should do business very, very ethically. That is something which is paramount to me, and I totally agree that everything that we do has to be very, very transparent and well defined and agreed with the dealers, so that there is no disconnect and there is no surprises.
Thank you. Your view, sir?
I agree. If it is to be given, it has to be given through you, or in conjunction or in consent from the dealer principal. And I've got no second, fourth thought to it. It should happen like this only. Yes, there can be contests, there can be, but again, it has to happen through the partner itself, because we don't have any say in the employee or anybody who is deployed by you. So I completely agree. This should not happen, and this should only happen through a dealer principal. I am in complete agreement.
Your view, sir?
Agree with what Puneet and Vaneshwar said. So, but yes, it is, the trust is critical in this business, obviously, and the dealers are the partners with financier. There has to be a trust. If this feedback is there, so obviously I believe there is a work to do. So, but yes, the payouts, it is not of whom is being paid, whether DSC should be paid or not. It is more about the transparency and the governance which should be there. So I understand, and as both of them said, yes, we should have a transparent, clear, kind of incentive structure, and that can be automated, and there should not be any kind of those reconciliation issues or who has been paid or what has been paid. That should be very, very transparent, and we believe in that. And I think, yes, and obviously these structures more or less are led by dealers, not by the financiers as such, So every dealer has their own kind of design, and the requirement of a Mumbai dealer is altogether different from a dealer of a Sardar share, maybe, right? And it is dealer-led structures. I do agree that structure should be transparent with the dealer. That transparency should be there, yes.
Thank you, sir. Thanks for the confidence that we are working in that direction. Another pain point that's come out is about the CV business. A lot of CV dealers, it's very loud in the survey that CV is not given as much importance as PV, whether it comes to the rates, whether it comes to the TAT, whether, it comes to the interest or the penal interest that is charged, or, there are a lot of factors in the CV business. So, why is there a parity that differentiates both these customers? Because they are the guys who are also earning bread for this country. So, how do you think that this can be bettered?
Yeah, so obviously CV is a different game a little bit. It has, different peculiarities in this business than PV as compared to PV. And CV is more about not only the customer, it is more about the earning of the asset. And this is the earn and pay segment, we call it in AU, and we love funding this segment. This is a very meaningful, significant size in my overall portfolio. And so Though it may be little tricky, yes, but working in this field for 3 decades now, and we understand the complexities of this business, and much more resolved. It can be fragmented into different segments, what you said, right? There is a small commercial vehicle and there are large commercial vehicles. And within that, there are first-time buyers, small fleet borrowers. Those kind of turnarounds can be expedited by, faster field level assessments. The there is a field level assessment which happens in a small fleet owner or for a kind of single fleet owner or a first-time buyer. That's the only thing which, and that can be translated, and these journeys are also digitized now. It's not that only PVs are digitized, even the CVs are digitized. And the large fleet owners are obviously, there can be scoring models which, further enhances this journey. And I would say that yes, in this segment, I want to bring a point over here that generally in the heavy commercial segments or light commercial segments, the much more price transparency is required, right? What we feel, at customer to customer level and based upon the OEM incentives or the dealer level schemes, the pricing varies from customer to customer for the same vehicle, right? So those discussions hamper the, the workflow on the particular deal. Because how to judge a customer cash flow coming in, right? How to judge what margin he's putting in. All those stuff, and multiple discussion happens around that, which leads to a delay in their decisions. So I think if industry, works upon the price transparency, on the transaction economy is clear, then it can be much sharpened. Yes.
Thank you. Thank you for your views, sir. Your views, Mr. Devan.
So I'm primarily on the PV side, but we do a little bit of taxi. There's another vertical of ours who does commercial vehicles. So on the taxi side, I think it's all risk, which is you bill pay more to the risk what you charge. So it's again directly proportional to how much risk you bill. And we have seen the taxi segment, the CV segment, the LCV segment, the HCV segment, they have a little quadrant of higher risk. So that gets charged into what is being charged with the customer. And second is cost of collections. So the cash flows which are not very permanent in nature, it changes, it actually increases your cost of collection. So those things get billed back to a customer. While the government has been extremely supportive in terms of providing CGTMSE cover for the taxi segment. So we have just increased our, I would say, focus or the LTVs for doing the, so those things are getting passed on to. And repeat customers, of course, they get better price, they get better rates. It's the segment which Mr. Garg also said, it's the differentiation of the segment, and it gets charged accordingly. So it is not a flat piece which gets charged.
We hope that next year dealers would find it more interesting in the CV arena.
Yeah, as and when it matures more, I think I'm sure you will find a good cycle coming in.
Your views?
So Sachin, I think it is very important the way a dealer today is trying to, and people said today that we are not in our showrooms. Amar mentioned this in his morning speech, that today in our showroom we are not fighting a customer, but we are fighting, the way the customer has researched and has come to the showroom. Yeah, so that's the level of education the customer is having. So what we want to do is primarily also see how we are able to better service the customer in different categories. So a guy who is going to fund an EV vehicle will need to have a different skill set. A guy who needs to fund an PV vehicle needs to have a different skill set. Similarly, a guy who funds a CV portfolio needs to have a different skill set. So we are looking at whether we can segregate people. So we are thinking from that perspective, that can we look at different people to look at the category and develop a core strength to fund that category over a period of time. Yeah, so that is one area that we are strongly exploring. The other is on the CV side, how do you underwrite the customer is very important. And my both colleagues, they have mentioned about new to business, you know, fleet owners, so on and so forth. So this is another area where we are trying to see how do we underwrite those customers so that they get a good rate. And we are confident that if we are pricing the product, when I say product means the loan, we are pricing it absolutely well for that customer with the kind of business that the customer is making. Yeah. So these are some of these initiatives which is being seen, but let me tell you very honestly, all these categories are very important. CV is also very, very important category when it comes from a financing point of view. So there is no reason that, you know, over a period that the dealer should complain that the lenders are not giving due importance to the CV category. Just to apprise you, you know, the LMM category, which is the last mile mobility category, which is the three-wheeler category, the kind of electrification that we are seeing and the kind of growth that we are seeing, okay, you know, we are reinventing ourselves in terms of how do we fund that category, okay. So we are thinking it very seriously, and there are, again, as I said, technology is going to play a very important role to underwrite those customers so that we are able to price the product well, so that the guy who is making an earn out of the business gets the right loan and able to pay. The importance is to able to pay from the income that he is making so that the guy doesn't default. So very, very strong data science team, strong algorithms are being put in place when it comes to the commercial category and able to fund that category. Thank you.
Great to see, you know, that CV is become a point of discussion with, you know, all the finance companies. However, another untapped opportunity that dealers feel that financiers are not very much focused even today on is the used car and, you know, the demo cars that dealers use. So I think this is something that the industry is evolving. We see the organized retail of used cars is going up by the day, and so would be the finance. So I think a lot of work needs to be done here. So with the paucity of time, I would like to request Mr. Banerjee to answer this question first.
Yeah. So you are rightly hitting all the points which are very, very critical and important. Used car is going to be 3 times of what the new cars is sold. It's only how do you make the financing very, very attractive. You know, we see that the trend that is coming in is also that people wants to replace their vehicle now much faster as compared to what they used to do earlier. And again, you know, people are very serious about the used car business. So most of the financiers that I see, and especially you know, some of the leading financial institution, they lead that business, you know, so it's a very important and a very critical business both on the PV and the CV side. Yeah, and what was your next question?
And demo cars.
And demo cars, yeah. Demo cars, to me, you know, something that is one of the most, one of the portfolio where you don't spend any money to get the business, okay? So it is very important for us, and we have created a program where we are funding all the demo cars. So, so we are kind of streamlining that part also, because your OPEX and credit cost is the least when it comes to the demo cars. However, you don't make so much of money because the tenor is very less. But you know, but it is important that the demo cars are looked in a perspective that while you fund them, it is also important that when they get resold again, you have an opportunity to even fund them back. Okay. So that is how I look at both the you know, the used car and demo car importance in our line of business. Yes.
A quick word on that, sir.
So used car is extremely important. It's a large market, it's an ever growing market. But but it also comes with some inherent risk in terms of registration transfer and so on and so forth. But I'm still seeing a long way which has just moved on in terms of how we transfer the registration, how we now verify an asset, how we, it has now become fairly digital. Is it important? It's extremely important for me. I can tell you for Tata Capital, it is an important portfolio and we want to continue to grow this and it will be a growth product for us. Coming on demo car funding, again, it's a life cycle product. It's the need and we are more than happy to fund a demo car. So I don't think so people sitting out here will have any issue in funding any of those. Thank you so much.
The idea of the question was, to launch these as a product. I mean, while there is a willingness to do it from the financier, but dealers have a feeling that, it's not coming in as a proper documented program where it's easy that the dealer just goes in and takes it. Like, what's a new car interest, what is the tenure of a new car.
So I will not deny it. So used car is the middle son.
Yes.
So you have a two-wheeler, which it's the pampered one, the middle one, and then you have the senior brother, which is the passenger vehicle. So used car had a secondary over. I will not deny to that, but it is now becoming a large market, and for us, it is profitable. It is growing, and I am sure each one of us is willing to invest in used cars, and you will find more transparency coming in used cars in terms of how we inch to growth in doing used cars. And demo, of course, it is considered as a sub-segment product in the passenger vehicle. I completely agree it has to be seen as a vertical in itself, and it has to happen to become a program. We have a program, but do we publicize it? Maybe we are still to do more.
Your view, sir?
So, as both of them mentioned, so we also have a program to fund demo cars. So, I don't know whether these questions, obviously, it is not being sourced through ground, or is there any communication problem over here? But yes, financiers do have a program on demo cars. So, and regarding the used car, obviously, this industry after the GST 2.0, it was there under stress for a while, right? And the numbers gone down due to the lower resale prices and the confusion in the industry on that. But yes, it has come up the curve again, and as he mentioned, it is going to shine maybe 2.5x or 3x of the new cars. That would be the number which we get in used cars. So, and there are a lot of, as you mentioned, there are certain challenges, inherent challenges of used car, but yes, there had been a lot of progress, and with this Vahan integration in place, all the data of Challan, history, everything is available. Yes, one or two more steps, like insurance industry is also there. So if, insurance industry can help us in integration, giving us the insurance data or the claim history or all those data, which financier generally doesn't get as of today. So that can further enable this. And used car, pretty much we are doing a good work in used car financing. As I mentioned, the decisions are as good as new cars. You can sanction the loan without inspection or valuation, which is always, that parallelly this inspection of the vehicle happens. So again, this is the, I think, space which automotive industry will witness, that will see the growth in coming years. Yes. Thank you.
Great,
so much.
sir.
Thank you so much.
While today's session was, really insightful, and I think almost every pain point that dealers have brought in through the survey, we see already that have been acknowledged by the finance companies. A lot of the points have already been worked upon. A lot of the points have been agreed to, clear in a few days or months. So I think it was a wonderful session that we had today. Thanks a lot to all of you, and thanks for the audience for having a patient hearing to all of us.
Thank you very much. Ladies and gentlemen, one message that stands out clearly: growth in auto finance and dealership business growth truly won't come from just waiting for the perfect conditions. I must say that it's all about transforming today's bottlenecks into tomorrow's breakthroughs. And our esteemed distinguished panelists have explained to us, shared with us, not just the insights, but also their practical perspectives. Ladies and gentlemen, may we please give them a lovely round of applause, so we all know now what's working and what's next. Ladies and gentlemen, to do the honors, we like to felicitate all our distinguished panelists and our moderator with a very lovely memento from FADA. May we please kindly request Ms. Garima Misra, FADA Executive Member, to kindly join us here on the dais and present the token of love to all our distinguished panelists.